Hello. Welcome to another video from 10x Investor Education. So today, March 28th, end of last week, and actually I would like to cover the week highlights in this video. So what happened last week literally? So let's start with Bitcoin. So what happened to Bitcoin was almost $6.5 billion worth of options expired last week, March 19th, and that caused huge volatility in Bitcoin prices. So Bitcoin almost went down all the way to $51,000. It came back today again to 56,000, but there's a huge volatility, and I think from now on the volatility is going to continue. So actually, if you look at the options expiring next month, which is end of April, so there is actually a lot of options that expire very upside, which is close to $80,000. So I'm not saying Bitcoin price will actually hit $80,000, but there's a lot more positive on Bitcoin price based on options. So I'm hoping from April 1st it's going to cross 60,000. Don't bet on my word, but that is what my expectations is. That's about Bitcoin. But in general, the NFT craze is still going on. A lot of people are entering into NFT, and some of the stocks went up as much as 5,000%. So I'm not going to trade because those are day trader stocks at this point. A lot of them are Chinese based. They are just trading based upon just momentum and news. So I'm only going to focus on actual stocks that are going to make money in next couple of videos. So that is what about actually Bitcoin and crypto for last week. So coming to rest of the market actually, so your stocks should have gone up last week because S&P 500 and Dow Jones both actually went up last week, fraction percent, whereas tech stocks went down last week. So but still has been very volatile. Some days the Nasdaq went down 2.5%, but in general, if you look at close of the week, the actually if you own major S&P 500 stocks, they went up. So that is what it is. So unless you have a lot of SPACs and a lot of momentum stocks, your portfolio might have gone down, but your portfolio really should be up last week if you have diversified portfolio. So one major news I would like to cover in this week was Suez Canal. So one of the major evergreen ship, which is a huge humongous ship, got stuck in Suez Canal, and people not tried have been trying for almost a week. They're not able to get rid of it from getting blocked. So almost 200 big container ships are behind waiting for this ship to be removed, which is getting blocked. So I think this is going to take a while. The effect of this is market is oil prices. Actually oil prices went up decently last week based on this. Not only that, some of the oil container stocks such as NAT, DHT I own personally because that is one of the best shipping container stocks for oil, and actually went up last week. And I think over a period of time, as oil prices goes up, these actually prices also I think will go up. So one of the news that I have been following with ARK and Cathie Wood. So as you guys know, for the remaining last 3 months of this year, the last 3 months of the year, the ARK stocks have been doing badly. So they are negative for the year. So if you look at last Cathie Wood podcast, what she has been telling is value stocks are actually value traps, and they should be investing into growth stocks, and also you should be investing into archetype stocks. The reason because for the long term they are the one which are going to actually go up, whereas value stocks are purely value trap. Do not get into the value trap and look for long term and invest into growth stocks. So which is really, I think to some extent I believe what she's saying, but some of the stocks that ARK funds has, literally a lot of companies do not have consistent revenues for a quarter and very high either P by sales or P by E earnings. So that's the reason why when market correction happens, especially interest rates happens, goes up, interest rates goes up, there is a huge pressure on these high growth stocks. That's the reason why actually these stocks goes down. This mainly depends on the market movers. So when people actually, the big hedge fund people, when they rotate from high growth stocks to value and cyclical stocks, naturally you have to see the fund flow money based on ETF.com. That's the reason why actually these high growth stocks have been losing, and whereas value and cyclical stocks have been gaining momentum because the money has been flowing from this to there. So fortunately last week interest rates stabilized, they are not going up much. If that continue, and I would say I think tech stocks will come a little bit up, but end of the year almost every analyst that comes to CNBC, they like value stocks for the year, and I bet the value stocks. And actually I have been diversifying based on whenever the tech stocks goes up, I do some covered calls, sell some covered calls, and rotating that money into financials, and also recently other sectors that I think that will do in 2021. So I know most of the QQQ type sectors, and tech stocks went up by almost 50% last year, the ETFs. But I don't, 2021 will not be nowhere close to that, and I believe you need to have a very diversified portfolio to get better gains. So I would like to focus based on last couple of days news. The new Biden infrastructure bill is coming. So it is, Biden is going to present that this week in Pittsburgh, and it's close to $3 trillion. And this is not a theory, just like last presidential Trump election time. This is actually 99% pretty sure it's going to happen. And the way they are going to get money for this $3 trillion, they are actually announcing in two ways. One is to increase the corporate tax to 28%, and also other way is actually increasing the high income people who are making more than. So finally what I would like to cover is the financial thing. So the financial sector actually has been growing up for last couple of weeks. So the XLF, the individual banks, Wells Fargo, Bank of America, all have been going up. So if you look at it, recent news from the Fed, so there has been a bunch of restrictions implemented last June 2020. So because of the financial crisis, so what happened was Federal Reserve put restrictions on share buybacks and also dividend payments from the banks. So those will expire this March. So not only that, I think this will have, banks are making a ton of money now, and they will actually buy back shares and also increase dividend, get the dividends back. This will actually, I think there is more potential for the financial stocks to go up this quarter and as well as next quarter. So if you have not invested any money into financial sector, this is what I would say. If there are dips, that's a very good time to get into those financial sector.